My name is Crystal Hawley, Business Administration major at Emporia State University, and today we'll be doing a financial analysis on Under Armour Incorporated. So, Under Armour was founded in 1996. They're an athletic retail company, and today they've grown into a $3.96 billion company. We'll take a look at their financials. So, as of 2006, you can see their financial status, but what do these things mean? So their gross margin percentage is their revenue minus their cost of goods sold divided by revenue. The higher this number is, the more the company retains on each dollar of sales. So if they sell $1 worth of product, they retain 50 cents. The operating margin percentage is very similar to that. It is just the money that is kept after the operating expenses are paid. So they keep 13 cents after those expenses for a profit. The net income is a show of the company's health. It's also called the bottom line. Positive numbers equal profitability. And so you can see the net income of Under Armour was $39 million US. Looking at their stocks as of 2015, they had 0.10 earnings per share compared to Nike that had 0.36 in 2015. And Under Armour didn't pay out any dividends, but that doesn't mean that this isn't a profitable stock. Nike is a lot more established and had a lot more shares and profitability. So Under Armour has room for growth in the future. So shareholders would most likely be more likely to invest in their competitor. But that being said, with their constant growth rate, this is still a good company to make an investment in. So what struggles does Under Armour have? Brand recognition is one of them. Nike and Adidas have been around for a while. Nike sponsors a lot of major events. We see them at the Olympics, professional sports, so on and so forth. So their competition, how can they compete with that? They can sell on an individual level. They can earn some new contracts through marketing efforts. And one thing that they're doing now is the International Olympic Committee is allowing non-Olympic sponsors to advertise with their athletes with verbiage restrictions. So the article that I read was how Under Armour plans to steal Nike's thunder at the Rio Olympics. They've already started doing this by featuring an advertisement called Rule Yourself that had Michael Phelps, gold medal Olympic swimmer, featured in this video. It had over 6 million views and was their top-rated video and ad on their website earlier this year. So today, let's look at Under Armour's financials. Their gross margin is 0.48 cents compared to Nike, which was 45.97% in 2015. They retain 10 cents for every dollar made after expenses. Nike retains 14.02, so Under Armour may have a little bit more debt or operating expenses. They have a steadily increasing NOI showing growth and profitability. Of course, Nike shows that it is a much larger company. So, in the eyes of the stockholders, looking at their NASDAQ, they were at 30.6. So this means that the financial status is continuing to increase and the company is more valuable and appealing to stockholders. So as of 2015, they continue to grow at an increasing rate. Looking solely on the basis of financials with no outside resources, this would be a good stock to invest in. So where can they go with their new developments? These are NASDAQ's projections for constant growth. And personally, would I invest? I would. I believe this would be a good company to invest in, solely looking at their financial analysis and no other details. Looking at their risk, they have some maturity risk because it takes a while for people to get their investment back because it's slow but constant growth. On the market level, there's governmental forces. Firm specific, then you have regulations on safety, labor. They're changing their game right now with being able to market in the Olympics. But they do have a low default risk as they show that continual growth and low debt ratio. So in conclusion, they're a solid growing company that's proved to be a solid competitor with Nike. You know, they're a good company to invest in because they continue to increase in profitability and their brand recognition continues to grow on a daily basis. So Michael Phelps' game-changing video, if you haven't watched this video, you can go to their website or follow this link to take a look at this video that is making Under Armour truly give Nike a run for their money. And these are my references.